Hey, everybody, welcome to the Juice Radio and Talk Show. I'm one of your super co hosts here. As you all know, on the Juice Radio and Talk Show, we are all co hosts because Jesus Christ is the host of this platform. We all fall underneath him. We go by his guidance, and I'm so happy we do that. Listen, you got to stay covered and protected. So why not be under the one who can cover and protect you? All right. Our Lord and Savior, Jesus Christ. Listen, you all know today is Monday, is Money Monday. Time to get your lunch and come on over here and learn, okay? We have our other super co-host here, Pastor Tawana Grant. She's a great financial advisor. She's going to help us get our credit together, get some knowledge about this credit. Those of you who are just tuning in know this. Every Monday afternoon, 12 noon Eastern Standard Time, we are here. We're going to heal you too. We are here to give you financial tips and advice that we pray will help you. And listen, and get your money right. Get your money right. This is the year that I believe, Pastor Grant, people's money need to be increasing, not decreasing. Right?
Amen. That's right. And you said the right thing. Heal. We want to be healed even in our finances. The word of God says that he sent his word to heal us. And so there is a healing message in the word of God, even in our finances. So because we give, we become good stewards, then we are better, right? I mentioned that service on Sunday. I said, when your money is better, you feel better.
Ooh, don't you know? Don't you know? Ooh, child. It can heal you up real quick. You be sick and your money right and your body get right.
Yes. So the emotions that come along with being in a good place, being in a safe place, being under control, right? A lot of times we might feel like our money is out of control and therefore we are reacting. And so we want to make sure that we're enabling ourselves to be in a positive position so that we hold the reins, so that we manage our trajectory of where we're going financially. And so that's the blessing of getting more information. We're going to heal you in your finances too.
Healing in your finances. It'll work wonders. Yes. It'll work wonders. So you all know that we're also on panel as your co-host, but guess what? You too are our co-hosts, you who are in the chats and you who are viewing. If you have a question during this video and you would like to ask your question, go ahead and drop it in the comments and we'll do our best to get it on screen and have some answers if we have them. If we don't have the answers, know this, we're not going to just tell you anything. We're going to tell you, hold on, give me some time to get that correct answer, and then we'll get that answer to you. But if you want to just drop a little note to say hello in the chat, go ahead and do that, like Demita did. Hey, Demita. She says, good afternoon. How you doing, girl? Hey, girl, hey. Tammy's also in the chat. She says, good afternoon. Hey, Tammy. I love it. And Demita saying amen. All right, let's jump into this because we've got 1 hour and we want to fill the people with some good knowledge. Pastor Grant, we're talking about credit today.
Yes. So we're grateful for the opportunity again to share. We've talked about budgeting. We talked about some of the good levers that you use in your budget, right? Your income and your expenses, and then how you manage those to bring those in better order so that you increase the gap between what you bring in and what you send out so that you have more to operate with. And most of the time we're in constraints because we have a very minimal amount of finances to operate from. So hopefully you've taken some of the information we've shared the last couple of weeks, you've applied them, right? Wisdom is knowledge applied. You've applied them. And so now you're getting the benefits and you're starting to see some traction. You may not see it immediately, but at least behavior is changing. And so part of the behavior change is that you will see growth from it. So if you started it and it still feels uncomfortable, keep doing it. Keep going. Listen, when change happens, you leave the area of comfortability. Greatness does not lie in comfort. Excellence does not lie in comfort. You have to pivot your posture to do something better. So today we're going to be talking about credit. What is credit? Credit really is just an agreement you have between yourself and a lender or the person who you will obtain the goods or services from with the promise that you would pay them upon their agreed upon date at their agreed upon amount. So really it is an agreement, right, between you and another party to lend on behalf in good favor for a immediate access to whatever goods or services you want to use right now. So again, it's one of those receive now, pay later, right? And so that's why you have to be very careful and mindful of how you extend and receive your credit. For
Yes.
example, you get a loan, the lender gives you the money immediately, but you have already signed an agreement that I'm going to repay you
Yes.
over a period of time at a certain amount. And how lenders make their money from extending you the funds immediately is that they apply certain fees. So that's
Okay.
really what credit is.
Now,
Yes.
those of you out there, it is an agreement. Let me turn this
Yes.
ringer off. These people, let's turn this off. It is an agreement. And that's part of what people really have to understand and know, that part. It's an agreement.
Yes,
So
yes.
you sign a paperwork when you're doing your credit cards. You agree to give them their money during their terms. You agree to the fees.
Yes.
You agree to the guidelines. It is an agreement. Some people, after they get the credit card, they forget about the agreement part.
Right, right. That is so true. And you have your word out there. So that's why it's so important to make sure you understand the terms clearly, right? Understand, maybe I want to pay it off early. I'm just doing it because I don't have it immediately, but I have some funding that's coming. Make sure you are aware that if I pay it off early, I'm not penalized. Right. Or if I decide that I want to pay more, they'll receive it and pay it on the balance. Right. And so draw that down so your fees are less every month. So again, it's so important because this is an agreement between you and another party, and it is legal binding. So it's not something if you change your mind. There are some where you have if you purchase a car alone, you have an opportunity for a certain number of hours to change your mind. But in most instances, when you leave the table, it's yours, unless something in the agreement was faulty.
Okay, so let's talk about this first part, the elements of credit. We talked a little bit about that in the show earlier. Those of you who are just watching, you go back and rewind this and watch from the beginning. But real quick, a lot of people, I think they have to really understand, because there's a lot of people that get credit, they use the credit, some abuse the credit, and then they try to restore and fix the credit. And some of them do fix it, but then they end up getting into an even worse situation. Pastor Grant, can you tell us why and what is credit supposed to be used for in your definition?
So in my own personal definition, credit is a leverage of someone else's funding to reach a major goal with the understanding I'm going to manage it to ensure I pay it timely. So there are some things we go and get credit for. We shouldn't. It's not a major goal. It's not a necessity, right? Sometimes we extend credit on things that are what we call flexible spending. Like, I'm going to use my credit and I'm going to go on vacation, and then I'm going to spend 2 years paying for a week on vacation. You really have to think about it. Is this credit worthy? Is what I'm doing credit worthy? So, and sometimes I would consider that to be major purchases like a car or a house. A major purchase, of course, like a business, right? You're doing a business loan, you're doing some procurement, you're getting operating expense. So those are things that I could consider to be major enough to warrant a credit extension. Some other things might be even health. Sometimes people are having serious health issues and you have to sign, right, in order to afford to be able to take care of your health. So again, these are major things that you want to go about doing, because in the end, they will turn out to be assets to you. They'll turn out to be a benefit to you. These are normally long-term lasting activities that you do, again, that are a benefit, not flexible spending, leveraging credit. That's a lot of times where we get in trouble, using the credit for purses, using credit for a lot of what I consider, again, flexible spending that you really don't have to have, especially unless your intention is, right? My exception to that might be if you're trying to build your credit, so you're getting it and you're paying it off at the end of the month. If you're getting something and you have set and managed yourself so you're disciplined enough that I'm going to get it and pay it off because I have a goal. Again, we talked about credit is for a goal. Credit extension is for a goal. So I'm getting it now with the intention I'm building my credit. I'm doing this so that I can build my credit. So I can get the house, or so that I can get the car, because I haven't had a line of of credit extended to me, so I therefore have not built up a credit history. So in those instances, I would say, yes, do that because you have a goal in mind. You've already set yourself to be a good steward over your plan, right? Because we talked about a budget, we talked about having a strategy, we talked about having a plan. So if you're going to do that for your plan, I'm all with you.
There you go. There you go. And again, if you want to get the credit cards, like she's saying, if you want to pay them, you want to use them, and your goal is to build your credit, you want to make sure that you stick with a good payment plan. And
Yes.
we're going to teach on some tips about that also, because some people think, okay, I got $1,000 credit limit. I can go ahead and spend up to that credit limit and I'm good. But there's a negative side to that if you spend up to the max of that credit limit. And we're going to be discussing a little bit of that as well. Now, Tammy has a question in the comments, and then I'm going to take this question, and then I'm going to go ahead and let Pastor Grant continue because she's got so much information she wants to cover in this segment. So Tammy's question is this: can you discuss a little bit about the importance of credit score? I have a client who literally didn't have a score, had to build credit. He did, but because he had not demonstrated a credit history, he still could not buy a car on his own, even though he had improved his credit score to 700s. And then she said this: he started with a secure credit card to help build his credit. Go ahead, Pastor Grant.
Yeah, so that's definitely one of the options, right? Because you have to think about this again. A credit lender is extending their finances on your behalf and trust that you will repay. Mm-hmm. And so one of the ways that we build confidence so that they are confident in making that kind of decisions toward us as an individual is the credit history. They're looking to see how faithful or committed you've been to prior agreements, because that shows your pattern, right? Mm-hmm. So if we have a pattern of paying successfully, of retaining our commitment, of being a good steward, then they are very easily to say, yes, you can go. A lot of times they look at the payment history, right? So let's talk about credit score right quick. Mm-hmm. So what is the credit, right? So credit report is very important because, again, it deals with your financial history. It's like somebody opening up a book on you and they want to read what's been your story, your narrative. And so that's why I always tell people, even in my office at work, you own your narrative. You are your story. And so people watch what you do and they watch what you say. And so nobody owns that but you. So you have to be accountable for your narrative. So that's what a credit report is. Basically, it's a financial book on what you've done. And so people have the history of your credit report that says, here's what this person has purchased. Here's how much they actually had a credit leverage of. This is how much was extended to them. This is how much they in your report, it'll say how much they actually got up to. Because you talked about somebody going all the way. You mentioned about going up to 1,000. Well, your 1,000 is your cap. Some people might look at that very negatively because they're saying they're using everything that's available. Why? That's what normally lenders do when they're doing an exception, especially if they look at all your credit cards that maxed out. That is an indicator, right, that you're not managing your finances well. Because all your cards are being leveraged, right? And so it's not the fact of having cards, it's about how you use the instrument. Credit is just an instrument. It is. Credit is an instrument to get to what you want.
Yes. Right? And those of you watching know this. This is, well, we're going to be continuing this message regarding credit for the next few weeks because it's so detailed. So it's not just a one show that we're going to be doing on this. This is a series. So this is video 1 of our credit series. Okay. So if those of you who are saying, hey, you didn't answer this, didn't answer that, put your questions and comments in the chats. We're going to build this up according to our series. We're going to keep it going and we're going to get to those questions and comments. We're going to get to the points of how can I restore my credit? I know a lot of you are interested in that. We're going to get to bankruptcies. We're going to talk about all of that. We're going to talk to, how much limit should I use on the credit card I get? We're going to talk about all of that. So don't think that you're going to get everything in this one video. Today starts day 1 of the credit series in our Money Monday segments. Okay. So Pastor Grant, this, a lot of the misconception, like we said, again, with the credit, with the credit limit is people would get that $1,000 credit card limit, and then they would max it out like you just said, and then they max out the next card, and they max out the next card. And some people may say, well, I should have a good credit score because I'm paying the minimum balance every month. I'm not missing a payment. But there's a couple of things that's wrong with that. Let's share a little bit about that. First,
Yeah,
let's
yeah.
go with this maxing the limit out.
Yes, most certainly. So, and I'll answer Tammy's question as well,
Yes.
where she mentioned she had a client, and although he had built up some credit, it was new credit, right? So,
There
when
you
you
go.
think about your credit score calculation, there are several components to that a credit lender looks at. That's made up 5 different components that's made up of your credit report. One of them is payment history, and because that person is so new, not much payment history, and that's 35% of your score, right? When they're rating that. And then the person has, while he's good, right? He had a good credit score, it's still very new. And so lenders are often not having a high confidence because it's very new, especially when you're buying a car. Car is very expensive, right? And so you have to look at if he's gotten $1,000 worth of credit yet, he really hasn't built up enough history for a car that's $30,000 and $50,000, right? So they're doing some evaluation. The other thing is the length of credit history. Again, that's 15% of the credit score. Although he has a good credit score because he just got started, he hasn't had it long. And so when someone takes the number, they actually do a lot more assessment on the analysis portion, right? So it's more the number than just gaining the number. So they do evaluate that. But all of that is very important. He's doing the right thing. He's building credit. He's paying on time. He has a good number. Maintain it. Maintain it and allow that time to happen. Or there are some lenders who are more risk adverse. You know, that company was risk adverse. They might be more lenient on risk and have a lesser requirements when they evaluate. So I would say it's not over, but he's doing the right thing. So when we talk about maxing out again your various cards, you have to think about, again, they're going to look at one of the other components of the 5 key factors in your credit score is your amount owed out, right? So they're going to look at it. And the lower your credit balances are relative to their limits, the better your credit score will be. Because they're going to say this person understands the mechanism of credit. They use it when necessary and they keep it down, right? Credit card or credit extension line is not to be used as a natural part of your living, right? This is to allow or afford opportunity to leverage. This is leverage. This is not something that we use on an all the time basis to cover everything. And that's what they look at. Are you managing your regular income that you have for living expenses, for the natural part of the expenses that you have in life, operating expenses, and you're leveraging credit on a manageable basis, right? So if you have 7 cars and they're all maxed out, they're going to look at that. Yes, you do have that amount available to you. Yes. And you are paying on time, which is good because you're maintaining. But the fact that they are at the limit is a warning sign, especially to organizations who are risk adverse. They're looking for people who can manage within a specific amount of frame. And so the question is, again, why are you using them so much? Let's go back to our lesson 101. We need to get on a budget. We need to get on a budget.
There you go.
So that we can understand the leverage that credit affords us. It's not a bad thing to use credit, but we have to use it right? Rightly applying the word of truth. That's back biblical. Even though the word is truth, you got to rightly apply it. You got to rightly understand. The same is with credit and with our finances. While you may have it, that's how some people can have a whole lot of money, right? And it comes into their hands. And then in years and months, they have nothing. It comes about with being able to understand how money is to be used and how to leverage it so that you can retain it and it becomes a blessing to you.
Yes, yes. Listen, I'm loving this. And y'all, I hope y'all are taking notes on it as well. You know, get some knowledge of this. Pastor Grant, I found this online because so many people nowadays, I do financial, conversations with people a lot because I've got a financial background as well. And let me tell you, I got it from both sides. I have the good side of my own personal life that I did good financially. Yes. And then I have that bad side where I've dealt with some things, in my financial background personally that wasn't so pleasant. So I see it from all angles. I have done that. Okay. So people want you to understand, even if you're going through some situations financially that are bad, it's okay. Learn the lesson so that you can move forward and help somebody else and get yourself out of the situation. I've been there. I know about bankruptcy. I know about foreclosures. I know about all of that stuff, you know. I want to bring this up here. I found this on Google. And I asked Google this. I said, what is the percentage of people who have low credit scores? And it said this: only about 1.2% of Americans have a perfect 850 credit score. That's a low number. It says 16% of people, they were saying, have a score that's under like 600 or something like that. But only 1.2% of Americans have a perfect 850 credit score. Now, 850 is a perfect credit score. Okay. It's a perfect credit score. So I thought about that and I says, wow, so there's a lot. I thought those numbers were going to be higher as far as the 16% that it says it's a lower credit scores, but it's not. But
no, it basically matches up to the number of people who are the richest in America, right?
You better come on.
It's a very small number of demographics of that. And so in most cases, those are the same people who are managing well, who are managing finances well in most instances, right? And so what we have to do is learn how to change the tide on that, right? How do we now improve the score? And I totally agree with you. We've all had experience of financial areas where we can improve in hardships and hard bumps and life happened. And so hopefully what we do is, like you and I, we learn from that. Yes. And then we start to bring ourselves in a different clarity, a different lens, so that we can see where we've erred and how we can go about making new choices. It's in everything else, making new choices. Do I really need that? Because again, when I was in college and they were on the college campus, they was passing out the little pamphlets. They was getting everybody to sign up for a pen and a cup. And we hadn't been taught any of the principles about credit. Some of us had to learn through experience. And so because experience has been a teacher, I always say experience is a good teacher, but it's not always the best. Listening and having knowledge is better because then I can make a better decision. But we learn from experience. And so now we can share this kind of information to hopefully either give you hope that we've been there and done that. And so you can come out of that too.
Come out of it.
Or to encourage you not to go that route, but now choose to make informed decisions. I don't say better. I say informed. Informed decisions will help you to go forward.
I love it. Tammy is in the chat again. She says, I talked to a mortgage lender recently, and he told me some interesting information about the populations that had the lowest credit scores. Now, Tammy, this is probably going to be real good. This is probably going to be real good. And I have something to say about this. I have something to say about the populations that had the lowest credit scores. That's interesting. And she also says he did find people in my state tend to have low credit scores. And again, I think, Tammy, with this is, and I wrote this down right before Tammy put that comment up, Pastor Grant. And I said, sometimes if you're not aware, credit can be a trap.
Oh, yes, most definitely. It can be, because again, like I'm saying, they were extending it out. We had no information about how to make sure we're paying on time. We knew we wanted to pay on time, but we didn't know the results of not paying on time or the results that you just mentioned about maxing up to the top. We thought, hey, this is good. I have been just now given the privilege of spending $1,000. Right?
It's a gift.
Right. It's a gift. And no thought to how it could
to manage
result in impacting our lives, right? Impacting the things or future decisions that we would have to make, right? Our decisions of today impact our future decisions and some of the things that we have to live through and operate through, right? And so today we have an opportunity now to information. Our young people have access to information, but I always say wisdom is information applied. So when you take the information and you actually use it, then you're growing in wisdom. So I love that, Tammy, because I agree with her. There are some areas and demographics that are naturally low credit scores. Why? Because they don't have access to information. They don't have access to support. They don't have access to the the management, right, and the tooling that it takes. They don't have access to people who they can see and learn from to gain some of that experience in a safe way, right? In a safe way of having that information. So yes, those particular demographics are always going to suffer until we change the tide, and that's what we're hoping to do through our Money Mondays.
That's right. That's right. Change the narrative, put the lessons out there, and get people back on a higher credit score. Let me tell you this, Pastor Grant. And really, I want to do a whole series on the demographics of this. I really, Pastor Grant, let's put that in on this panel, the demographics of the credit scores. And Tammy, if you can help me by sending literature and information that you find, I would appreciate that as well. Here's the other thought that I have on here. What we do is we, like you said, we don't get the education. We don't get the true knowledge of what is to be used for. But those of you who have a low credit score right now, maybe there was some things that happened in your financial past that have brought your score down. I want you to know this. There's still hope.
Oh, yes.
There's still hope. Now, I'm going to tell you from experience, and I love it, Pastor Grant, when I have a personal experience and I can share it with others, because it's not just me saying, well, I heard somebody said they could do this or they can do that. And, it's just on the hearsay. But when it's factual and true, and I have lived the life that I'm telling you, my credit score at one time was a 500 and something. Okay. It was low, right?
Yes.
And I started researching. Like you said, we need to research. We need to find the tools. We need to find the information. And let me tell you all this real quick. Warning, wah, 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 the warning sign. Okay, wah, wah, wah.
Yes.
Stop paying all these credit repair companies all this money.
Oh, yes. Don't do it. Don't do it.
Come on
it's
now.
unnecessary, because you can do a lot of that on your own. Mainly all of it on your own. You just have to discipline yourself, right? You can call and make agreements. You can call and make settlements. You can pay them down. Most often, unfortunately, some of them are scams, right? And you pay the money and nothing ever changes, because when you're changing and you're trying to repair your credit, it takes time.
That's
it takes time for you to pay it down. It takes time for it to clear off. And so it's work for you to do, but this is you, right? This is your narrative. This is your story. This is your life decision. So it's worth you putting the work in and then keeping that money to yourself. Yes, it's that I'm afraid to say who he found had the lowest. Yeah, I can pretty much note, right? I can pretty much note, because you have to think about what are the demographics that have most of the social services.
Wow.
So sometimes you'd be surprised, though, too, that there are areas. That's what I'm saying. A lot of people you would look at them and be surprised, because I'm a witness to seeing this. It looks like they have a lot, but they are house poor, or it looks like they have a lot and they're house and car poor.
That's what we need.
So
That's
they're able to get things, but not keep them. So you'll be surprised. I agree. Go ahead, Tam, and tell us what demographics. You'd be surprised. Sometimes it's even in the affluent areas that have poor credit, because they're using cash at sometimes, right? They're using large sums of cash. That's how some of our celebrities, right, can have a lot of money coming to their hands. Again, a lot of purchases, a lot of things, and then you turn around and they're having to go into bankruptcy, because again, it's mismanagement.
And I want to tell you all this. Like I said, there's light at the end of the tunnel. Let me tell you, I took my own personal credit score from a 500 to a 7+ and I did it on my own.
Yes.
I did it on my own with tools and resources that were free.
Yes.
And listening to the advice of others who did the same thing. So you can do it. And we're going to share that information with you as well. And when you learn the lesson of credit and get your credit back on track, you don't want to go back into that darkness now. You don't want to do that. So it's still a learning daily process. I even have a spreadsheet where I have debt on there, Pastor Grant. Okay, these debt, these cards are due. This is my limit. I know that I stay within that 30 percentile. I understand that. But we're going to teach y'all all of that too as well. All right. So let's get into Demita's question. She says, I fell into that trap and my credit score wasn't good, but now it's in the mid 700s. But now I have medical bills in the 1000s and the thousands, and I'm trying to pay it before it lowers. Pastor Grant, what's your thought on that?
Yeah, I've seen this a lot. The medical, medical bills can be astronomical. So what I do recommend is that some some actual hospitals or medical facilities have some lenders that they can refer you to, right? And
Mm-hmm.
you can be referred to where they can pay it off at the hospital location, right? And you can work with them to pay it off as a separate loan through them. And which is such a blessing. I've also seen some nonprofits that give contributions to individuals to help fund medical bills. So I would also say work with the hospital or Google and see if there are some medical lenders that will assist you in that, right? So that you can pay the bill down and then you work with them alternatively so that you can retain your credit score. Again, also look for some of those nonprofits who also facilitate assisting with medical bills, because I've seen that where they would pay some off, they would take it and pay 20 cents on a dollar, just trying to get people out of the owing, right, out of debt on medical bills, because we recognize that's necessary,
Mm-hmm.
right?
Mm-hmm.
Some people have had surgeries or been in the hospital extended amount of time, and we know how difficult that can be. And the last thing you want to do is add on now the debt from getting well. So I would say check into those two things. Those are my recommendations. And then, Regina, if you had anything else.
Yeah. Now, what I found out is I did have a medical, not a procedure, but I went to have the thing you get on the treadmill. I forget what it was. Stress test.
Stress test.
I had a stress test done. You get a certain age, you have to have all these things done. And I made this one mistake, and I said, I'll never do this again. I went in and they said, well, just sign these forms. And I said, well, how much is it? And they said, well, we don't know yet. We'll send you a bill, blah, blah, blah. And I said, well, how much is my insurance coming? Well, we don't know, blah, blah, blah. And I just signed and waited and did my little stress test and got home. Well, a month later, I got a bill for over $600.
Wow.
$600. I immediately called the hospital and I said, wait, what is this bill? And they said, it's a stress test. And I said, well, I asked when I was there how much all this was. And they said, well, we didn't know. So here's what I learned from that, you guys. First thing I learned was I know these appointments are important,
right?
But you need to speak with your insurance company before you go.
Yes.
To know what they are going to cover and how much they are going to cover, and have these conversations. Because let me tell you, Pastor Grant, when I got the bill, I was more stressed than when I was on treadmill.
Right. Because now you're surprised because they gave you no inclination of how much it would be, right?
Right. So I talked with the people and I told them, I said, listen, I wasn't aware that this was costing this much. And here's what the medical billing place said. They said, listen, we understand. They said, well, here's what we can do. You can pay it in monthly payments, no added interest, which that was good. Or they said you can make a lump sum payment and we'll give you 20% off the bill. So they do have options and ways that they can work with you. Yes. But you have to have those conversations with them. And I'm going to tell you all this part. Real quick, and then I'm going to get back to these comments. When you're talking to these medical billing companies or your credit card companies about disputes, about things on your card or disagreements that you have, please use a calm tone and a loving tone.
Yes.
Because they would be more apt. They're still individuals. They're still human beings that are answering these phones. And you don't know if they had a good day or a bad day. But I have learned that the people that I've had these nice, sweet conversations with are the ones that were more apt to work with me.
Yes.
Than the ones that have arguments. Yes.
Scripture says a soft answer turns away wrath.
Yes.
So you want to make sure that we are listening, because this is for you, that they're going to help you. And we always know the old people used to say, what is it? Sugar gets more than vinegar, right? And so you want to be sweet and kind and considerate, because they're talking to people all day long. And so you will make a difference in the way that you approach them and engage with them. And you're looking for them to help you, right?
Yes.
And so when you're looking for help, you want to be kind.
That's right. And also ask for the help. Ask them, what can you do to help me? What can you offer? They have something, but a lot of these representatives, they're not able to just tell you what they can do. They are waiting for you to ask. The Bible says, ask and ye shall receive.
Yes.
And as the old saying used to say, a closed mouth don't get fed. You got to ask them.
Say something. That's right.
Say something.
You just mentioned that there are a lot of opportunities or things that they can do that are non-standard, that are exceptions, that favor can fall on you, right? Because you're praying about it and asking God, and you're believing for something to open up the door, and you're trying to change. the Holy Spirit will get in there and help you when you decide, I want to do better, I want to do different. He will get in there and anoint that activity that you're doing. You don't know who he's going to give favor to.
That's
Right?
right.
So
That's
yes,
right.
I would say
They will
ask.
work with you.
Mhm.
So Tammy said, we'll get this and then I'll get back to Pastor Grant. Tammy says, wasn't a law passed? Hospitals have to disclose this information. Well, Tammy, I believe there allegedly there were maybe some laws passed, but here's the thing. Hospitals will tell you, well, they told me, I won't say tell you, but they told me we don't know how much it costs. This is what they told me. This is what the lady at the front desk says. I don't know how much it is. The doctor bills you, so forth. I don't know how much your insurance covers. I tried to be on the phone with the insurance company, and you got to go through all these press 1, press 2, press 23 and stuff. And by that time, they had already called me back there to the treadmill. So I would say when you have these appointments coming up, talk to your insurance company before
Ahead.
you get there ahead of time,
Yes.
and then find out. But as far as the laws and disclosures, I'm gonna have to look that up and research and see. But I know sometimes when you go to a hospital, a doctor's appointment, it may be hard for them to say, well, your appointment today is going to be, $700 or or $20 or whatever it is. They normally just want that copay, and then everything else they'll do different. But Pastor Grant, let's go ahead and continue.
Oh, most certainly. So we've talked about credit, some of the things that we recognize the importance of credit, right? Why do we leverage it? Why do we want to use it? Why do we want to pull out that card? Again, we talked about budgeting. So one of the things to help us improve our financial leverage and our financial status is to start using our debit card, right? Because that's immediate funds coming out, helps you maintain your budget plan a lot better than a credit card. But when you do have to use a credit card, we talked about before, one of the first questions you want to say, do I really need it? Is this really needed? Is this something that, again, is going to get me to a greater goal, great accomplishment, right? There are times when, of course, we want to use our card to get points. I think that sometimes has been a trick of the enemy to a lot of people, because I'm just going to use my card because I want the points. Yes, but also remember the intent to get the points, but not to increase your debt. So if you're going to use it for the points, then use it just like a debit card and recognize in your mind, I have to pay this off at the end of the month, right?
Yes.
So sometimes when we're saying, I'm just getting the points or I'm getting the benefits of it, we get the benefits on this end and they're very small to the impacts that we get on this end, which starts to build, right? It starts to build and gets larger than we ever expected. And it can happen overnight, it can happen very quickly without us even thinking about it. Before you look up, how many of y'all know? Before you look up, you got a couple of $100 on that card, and the month is not even over yet.
It's not over yet.
Yes, you have to be aware that I want to be tracking. I'm going to manage and monitor my credit spending just as closely as I do my dollar spending. I'm going to manage my credit spending just as much as I do my dollar spending. So I want to go on and talk about.
Yes.
Were there any more questions out there? We keep going.
Let's see what we had here. There was Demita was saying that's so true. She's talking about something you were mentioning earlier. And she also said these bills are from a chemo and hospital stay, because her comment up here said there's these two hospitals. She said there's two hospitals and I made an agreement for them to take it out monthly, but I found out they took it out once a year ago and that's it. Okay. Now, we got to be real careful with those agreements there too, y'all. Get it in writing some kind of way. And I usually now, Pastor Grant, I have just recently started doing automatic payments on some of my things. But I was in the past the type of person that would say, listen, I'm just going to give it to you. I ain't giving you my credit card because I didn't want situations like that happening. Don't be debiting my whole bank account.
Yes. And most of them now you can do a push, right? So it's not a pull. You can do a push, because I do a lot of those. There are some utilities, right, that I have on a pool, right? Just pay it every month. I don't have to worry about it. But there's some things that I do a push. So I set it to pay. My mortgage is set to pay from my account to them. So certain things are set to pay from me out of my checking account, our checking account rather, to them. And so I have the reins, but it's automatic. I don't have to worry about it. It's automatic. And that, with my type schedule and my pace, that eliminates any concern for me, right? I don't have to worry about it. So it works but you got to work it. A
You
lot of
gotta
things
work it.
work, but you got to work it. So I would just say, if you're of the mindset that, like you said, you don't want anybody just coming in, pulling, or making a mistake, or taking too much out, do a push. Do it where
Yes.
you send, and I think we talked about that, the minimum amount, or you send 100
Yes.
or 200, whatever you feel most comfortable that you put in your budget. You know that costs pretty much the same thing every month. You can do a push over there. And so that eliminates that concern of them drawing out on you.
Yes. Yes. Now I love this. I love this. And you guys, we have a lot to cover in this credit series, a lot to cover. We're going to teach you how to build and get those credit scores back up. But this is the basics. This is number one of our credit series. And we're going to get some more information on this. We're just telling you a whole bunch of the basic information for right now. Okay. Now I know there's a lot of people out there that have these credit inquiries. Y'all keep inquiring because you didn't get one credit card. I see, like Tammy had said, one of her clients was inquiring, to get this or get that. The inquiries, we're going to talk about that, the negative impact they have when they drop off. They will drop off. They don't stay around for forever. They like a bad boyfriend. They're there for temporarily, and then eventually they go on forever.
Right. So, there are different kinds of credit, right? When we talk about credit accounts, so you can have installment accounts. This is where you extend you a certain amount of credit, right? Up front, you're agreeing to repay it back. So you just have a certain amount, all have set a period of time, set amounts paid back, and then you're done, right? And so that's a good way to start building your credit with a reputable company, is to do an installment loan. You get it, you pay it off, and then that goes as a good basis on your history. The other one where we get into a lot of trouble sometimes is the revolving credit, right? Yes. So this is the credit where you have a line extended to you. And then rather than just getting it all at the beginning, we have that a lot with a lot of our credit cards. You get a allotment of permissive use. That's what I'm going to say. Permissive use. It doesn't mean you have to, but it's available to you, right? And so it revolves. And so typically you can use that certain amount anytime you want to, right? But you are required to pay back a certain amount because they're not going to extend any further until they do another research or not another credit analysis on you, and they'll bump it up further, right? But all of that depends on your history and your use. I want you to know that when they're looking at, do I want to give you more? They're also looking not just how well you paid, right? But how much are you using of it? And that'll let you know. Oftentimes, I know some people will say, I asked for a credit extension. They told me no. Well, you're at the max. And you've been there for a long time. They're not going to give you any more because you're not bringing the balance down. So their concern is, if I give you more, you're going to go up there. And if I give you more, you're going to spend to that. And so you're capping out every time. And so they're keeping you right there until you show a more managed use of your permitted line of credit. Permitted line of credit. And so while you are making payments, you really have to pay it down. Again, my encouragement is keep low balances. If you have two cars, and sometimes it depends on how you want to operate. So again, this is just my thoughts. If you have two cars and you need to make a major purchase, sometimes it's better to put 5 on one and 5 on the other.
Right.
Too low. And we're using 1,000 as the credit limit for our conversations today, right? I know some of you, like ourselves, have thousands, right, on a credit card, but we're using 1,000 as the basis. So
yes,
it might be a better position and posture for you to do 5 on one, 5 on another, and pay them down, right, before you do anything else, because then it doesn't show that they're maxed out. Right. Because some credit scores or reporting is very sensitive. So if you go to max on one, that could degrade your credit score because you've maxed out on that card. Okay. So that's my recommendation. So again, revolving credit, you really need to think about it. You need to decide and determine, is this a required expense? And I hit a certain time period of the month, I don't have the cash to use, but I'm going to leverage my credit card because this is a required expense and I will pay it back. Then that should be an option for you. But if you're using your credit, again, this is a permissive opportunity of use. Sometimes we overuse our privileges, right? You don't want to do that. You've been permitted that, allowed that. But then if it caused you pain on the back end, think about it. Think about, do I really need this? That's one of the whole decisions about whether you use your credit or not. Do I really need this? Yes. Right. And so
That's the real importance of it. Yes. Do I really need this? I have been, Pastor Grant, in stores after I got a new credit card, a new shiny credit card with a nice new balance,
yes.
low interest rate. And they say spend, spend, spend. And I went into some stores and I have got a little shopping cart and I pushed it around and put all sorts of stuff inside. And as I was on my way to the register, I heard this little godly voice say, "Do you need it?"
There you go. And you put it right back. I've
And I
done
put
that
it right
too.
back.
I've been in the store and I'm like, because sometimes we are using our credit as a reward to ourselves. I'm not
Mhm.
saying by any means that when you work hard, you don't deserve the best.
Right.
But you have to do
Right.
that in a comfortable level. We talked about the budget. That's why the budget tell you how much you can spend. If you're
Yes.
on the budget first, the budget said you got $50. You can willfully do something because you have it to pay it back, right?
Right.
So that's the whole intention. If we leverage our credit, let's do it with the intention of paying it back. And then therefore it becomes a blessing because it's not something we're dredging into the next month. Because
Mm.
that's what debt is. We're pulling it along with us into the next month. You don't want to do that when you don't have to. Again,
You
there are
don't want to
different
do that.
yeah, there's different ways of credit when you have to use it, right? There are times when we hit emergencies. Maybe the car broke down. You didn't have your emergency fund exactly where you needed to. So you used some of the emergency fund, but you had to use the credit card for the rest. You know you need a car to go to work. You know there's no other method of transportation to get there. There's still jobs that are nowhere near public transportation. So you
Yeah.
need a car. And so you need to be able to make that kind of decision, but do it wisely. And so you use the card and then you pay back down on the card. Then you build back up your savings. I had another person that I talked to about finances and helped mentor them. And she was so upset. She said, my car broke down and I had to use all my savings to get me another car. I said, I'm so proud of you. I'm so proud of you. She was like, why are you proud of me? I'm upset. I don't have any savings. I said, you had savings to use.
Come on with that. Come on with that.
I'm so proud of you. I am so proud of you. You had money. You didn't have to call anybody. You didn't
There
have
you
to use
go.
a credit card. You didn't have to have your car down for months. Anybody ever been there? Hallelujah. Not having a ride available. Listen, you
Yes,
had
sir.
emergency savings available to use. I'm so proud of you. I'm so proud
Yes.
of you. She hung up. She was feeling so much better. I said, I'm so proud of you. Now all you got to do is ride in your car because it's fixed now and then build back your savings back up. I said, I'm so proud of you.
Listen, and she fixed her car. She didn't buy a new
Yes.
one, right?
She
She didn't buy a new
one.
one.
She
Ah!
fixed it.
She
And she was
fixed that
able
one.
to move on. She was able to move on. So
There you
God is so
go.
good. Then I had another one who had savings, and she actually bought another one. She actually bought
Okay.
another one, but it was
Yes.
used. It wasn't brand new. So she
Yeah.
bought a used car. But again, proud that you had savings to use it.
Yes.
That's the whole point of us getting in a better financial posture so that we enable ourselves to win. So when emergencies do come up, we have something to use. We have something to leverage. You don't have to use your credit card, right? Because you know some of these large expenditures can be thousands of dollars, hundreds of dollars, right? On
Yes,
your
sir.
card, and it will take your time and period and effort to get it paid back down.
Yes,
So
sir.
when we use it in the right manner, credit is good. I want you to tell
It
you something.
is.
Credit is good.
It
is an
is.
opportunity to leverage somebody else's money for something that you need toward a goal. House, that's wonderful. Cars, that's wonderful. A business, that's wonderful. Somebody is giving you permissive use of their funds. That is wonderful. Use somebody else's money, especially when you're doing a business,
Yes.
as much as possible, because
That's
keep
right.
your money free to take care of your family. Keep
That's
your
right.
money free to do the things that you need to enable yourselves while building up your business, right? So credit extension is good when we use it rightly.
When we use it the right way. Listen, you
Yes.
guys, there's so much nuggets in this. There's so much nuggets in all of this. We're going to help y'all to get this credit back together. We're going to help you. I see y'all over here on Instagram. Thank y'all so much for being there. Noye Podcast Production. They take care of our podcast program. Thank you, Noye Podcast. He put over here in Instagram. Remember to subscribe to our podcast channel, the Juice Radio and Talk Show Podcast. Y'all want to get that, okay? You're sitting in the car. And maybe you don't have lunch at 12 o'clock. You may have it at 1 or 2. You don't want to miss the show. Go on my podcast and go ahead and listen to it again. Remember, subscribe to my YouTube channel, the Juice Radio and Talk Show. Look for the red mug. You see the logo all on the screen here, the red mug and the microphone, okay? So y'all go ahead and subscribe to that channel. Let's go ahead and let's get some more. And also hit like on this this video as well. Remember, hit like, hit subscribe. If you're just coming in, come on in the room. We welcome y'all. Come on in the room. But make sure y'all ring the doorbell when you come in. And the way you ring the doorbell is by hitting that like button on this video. Okay. And then when you exit, you want to close the door. And how do you do that? You click the share button. You click the share button and you share it with other people. Okay. Let's get into these comments here. We have some more comments here. And Derby Diva, how you doing, Derby Diva? Thank you for being here today. Thank you so much. Okay, women empowerment now. Okay, Derby now. How you doing, girl? She says, I have a credit counseling restoration business. Okay, that's a lot of credit counseling restoration business. Listen, if you're going to work with people on the credit counseling restoration business, make sure that you have a good conversation with them. I don't know if Derby charges, it's a business, she may, but listen, y'all make sure you have really good conversation with people to make sure that what you're looking for them to do is exactly what they're going to do. Okay, now we spoke about this earlier. I'm not saying this about Derby. Okay, I'm not saying this about Derby. I'm just saying be very careful with who you're going to work with. It's time we have conversations, Pastor Grant, right? Have conversations with people, and tell them, hey, what can you do for me? And what can I expect? And so forth. Derby's got a hard job because credit counseling and restoration, that's a hard job. But I believe she can do it. I believe she can do it. All right. Thank you, Derby, for being here. She said, correct. It will also affect your score when we were talking about these scores and stuff. She said, car, house, and one revolving line, avoid latest and try to pay revolving down to 10% of credit amount. I love that. I love that.
We talked about that. Keeping it low, right?
Keep it low.
Don't max out your cars because, again, that's part of the 5 categories that relates to your credit score directly. And the more we understand and have the information, the more we can make those kind of decisions, right? When we talked about maybe you want to do a little bit on one car and a little bit on the other and pay them both down. That way you won't max out one. Those are decisions you make because you have information and you know how credit works, right? You know,
you want to spread that credit around. You want to spread, if you've got a couple of cars, you want to spread it around. And I do what on my credit card. I even have my husband with this. I said, listen, how much have you spent on this card or that card? And he's like, I don't know. So I have my little spreadsheet and I put it up and I said, listen, if you go above this 30 percentile of use on this card, you're over the amount that credit score is going to get hit.
Yes. You don't want to pull too much of your credit leverage, right, from a particular card. I totally agree with you on that. And again, as you're using them, she just said the main thing, track and manage. You cannot control what you don't manage.
You got to track it. It will take work. It takes work because I do it, at least once a month or sometimes at most twice a month. But it helps me to look at our bottom line. I could take all the credit cards and on my one spreadsheet, I can see what our total limits are with a combined amount of all the credit cards. I can see what we owe and I can see what we have available and I can see our percentile of use and our percentile of debt. So it's a wonderful spreadsheet. God gave me the idea and I'll be sharing that with you all as well on here, but it's going to take work. You're going to have to track and manage it.
Yeah. I would say track and manage it. If you haven't seen your credit report in a period of time, make sure you request it. Go online. You can ask for it at the annualcreditreport.com. It is free, right? You get a free copy from each one of the credit reporting agencies once a year. I think it's valuable, especially if you're thinking about making a major purchase in the near future. You want to know before you go in. You don't want to be surprised. So you want to, again, own your narrative, own your credit narrative, own your history by evaluating. So ask for that free credit report. It is allowed to us all once a year from each and every one of them. Some of you may even have a card that gives you access to the credit report for free immediately, right? You can pull it up right in their database or in their application, and they can let you know what your history looks like because some of them most often are tracking closer than we are.
Yes, they are. Yes, they are. Yes, they are. Derby Diva says, right, and business loans. We're going to talk about business loans as well on the channel here during this credit series that we're starting today. We're also going to talk about how much should you borrow. Yes. And, we're going to talk about all of that. Some of you are, some of you are you're wanting to buy a house right now. Some of you are wanting to buy cars right now, vehicles right now. We're going to talk about that. You may be looking at more than you really should be getting. Now, the car dealership may tell you qualify for this car, $50,000. But listen, what's the difference between that one and the $25,000 one, especially if you don't have the home already.
Correct. You have
There's
to
a
make those kind
difference.
of money decisions,
Yes.
right? We're
Yes.
giving us financial literacy so that we can improve in every area of our lives. Don't you know when you improve in your finances, you've just about improved a lot of other areas too.
Yes, sir.
When your money is right, you enable yourself to do a lot of other things that free you up. And so this is wonderful. I am enjoying this series, and I'm like,
Yes.
Regina, I encourage you to join us every Monday at 12
Yes.
noon to 1 Eastern Standard Time for our lunchtime learning, because we want you to win in every area of your life.
Absolutely. Thank you, Derby Diva. She says she's been doing it over 20 years. She started with real estate. Okay, girl, we got something in common. We got something in common with this real estate.
Yeah.
All right. Fifi ASAP is here. How you doing, girl? How you doing? She says, hello, everyone. Late, but here. Thank you for being here, girl. You came on in. Appreciate it.
Yes.
Appreciate it.
Yes.
Listen, I have been loving this. Yes, go ahead. Go ahead, Pastor.
Same as what you were saying with the credit. No matter where you are, you're at the right place to get started, right?
That's right.
You're not too late to improve, to enhance, and to grow. What did one of our other viewers say? We want our money to grow, not to go.
Come on now. That's what she said. She said, we want our money to grow, not go.
That's right.
Love that. I love that. Well, you've been watching the Juice Radio and Talk Show with our super co-host here, Pastor Tawana Grant. She's a great financial informative advisor. Listen, let me tell you, she advises, she informs, and she prays for you all at the same time now.
Yes.
Y'all come on and join us for these Money Monday series here for the Lunch and Learn. I love this series. We are going to continue with our credit series. Pastor Grant and I are going to get together this week, and I'm going to just start uploading all of the snippets of what we're going to have and the screenshots and so forth, and put it on the channel here. Not the screenshots, to show when we're going to be coming live, because I want you guys to be prepared for the series. So normally what I do is I would put up the one for next week, but I'm going to try and get with Pastor Grant. I know she's super busy, but I'm going to try and get with her so we can go ahead and put the upcoming episodes at least for the month or for the next one. So you guys will be prepared. Okay. So remember, if you want to be reminded when we go live, now this is a great series y'all want to get involved with. Now, this is a perfect time to get your credit together. And it's also a perfect time to know how to obtain credit if you haven't had credit. So this series is not just for us adults, grown folks. Y'all go ahead and grab y'all teenagers and kids that y'all getting ready to send off to college. Tell them to come on over here to the Juice Radio and Talk Show. We need to talk to them before they get in the car and get to that college dorm. We need to talk to them because we don't want them to be stuck with this debt like we had. We finna educate. The one thing a lot of these colleges are not doing is having this credit counseling class. Where's that class at the college? Do they have it?
That's right. They need it, right? We lost a lot of numbers even in high school. So a lot of them are coming out without a lot of applicable information going into the next stage of their lives. So we want to make sure we enable them.
Yes, sir. They coming out of these colleges with two things, diploma and debt. Come on, now. We got to fix that. We got to fix that. Okay, these degrees and debt. Come on now, we're going to fix that. I absolutely appreciate all of y'all for being here. Thank you so much, Derby Diva. She says, I'm absolutely loving this. Thank you so much for connecting with us. We appreciate it. We want more people on panel to help us with this credit restoration because we're going to help heal some folks. Yeah, right, Holy Spirit. We're going to help heal communities, not just folks.
Yeah,
communities. Because like Tammy said, you'd be surprised.
The demographics.
Mm-hmm. The demographics. But guess what? There's a surprise coming because the Juice Radio and Talk Show is coming, and we're going to clean up and change that narrative. And then everybody else will start looking at these demographics and say, what happened? There's a change going on. You know why the change is going on? The Juice Radio and Talk Show is here with Pastor Tawana Grant, and we're going in them neighborhoods, and we're going to clean up the mess that somebody else left. Somebody need to do it. So we're here to help y'all do it. All right. Pastor Grant, I love this. Thank y'all all for being here in the chat. If you haven't subscribed to the channel already, make sure that you do that. Go over there to our YouTube channel. You see the logo on the screen here, the Juice Radio and Talk Show. Subscribe today. Make sure you go over there and subscribe. Also, if you would like more information on the Juice Radio and Talk Show, feel free to go over to these channels here. Listen, we're all over the place over here. We're all over the place in social media, but we're streaming basically on our YouTube channel. We also have our podcast channel here as well. I want to thank Noye Podcast Production for helping us to get that up and running. Also, want to thank our sponsors, Customer Apparel Shop, Israel Mason, great embroidery. If you like embroidery work done, go ahead and contact Israel Mason at Customer Apparel Shop. Reach him directly at 786-657-7501. And a great big thank you and shout out to our main sponsor, have been here with us from day one, Truth and Triumph Ministries. Truth and Triumph Ministries is a church ministry that cares about telling people the truth so that they will triumph in life. Y'all check out Truth and Triumph Ministries and share some love with them. Pastor Grant, thank you so much for being here today. I love it, love it, love it. You're always on point, on time. And I'm so glad we've got connected and we're going to help these folks out. This is a great, great, great series, our Money Monday series. Thank you for being here, Pastor Grant. Any closing words?
Yes, just want to encourage everyone that today is the first day of the rest of your life. Start from where you are and believe God for greater. Be blessed today.
Be blessed. We got to go.